I wasted many years of my trading career to acquire the information that I now have. And in today's video, I'm going to be sharing with you guys the key points that I think has helped me significantly in my trading. Hopefully it can help you as well. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. So the very first thing is finding a strategy that makes sense to you. We're going to get to more of the complex stuff here in a bit. But like I said, you have to stick with a strategy that makes sense to you and not strategy flop. I know as a beginning trader, a lot of traders, what they'll do is they'll use one strategy. It works for a little bit. As soon as it stops working, that's when they'll flip to a different strategy. They'll trade that for a little bit. As soon as it stops working, they'll then flip to another strategy. Now, I did this a lot earlier in my trading career, but once I started to stick to one specific strategy, that is when I started to see significant results. Now, as you continue to trade and as you trade in different market environments, there are going to be specific strategies that work in one market that don't work in another market. So being able to have a few different strategies that you can rely on in different market conditions is going to be very important. And as you continue to trade, you'll be able to develop those different strategies. But my biggest suggestion is don't use something that doesn't make sense to you. If the whole concept of supply and demand confuses you, you've done everything you could to learn supply and demand and it still does not make sense, don't use supply and demand. Maybe you really like Fibonacci, like I love using Fibonacci. It's very clear cut. All you need is a clear cut pivot low and pivot high. And then you can start finding your retracements. If that works for you and it makes sense, then what you want to do is you want to go all in on that strategy and develop your own system around it. If the Fibonacci doesn't make sense to you, and again, you put in countless hours to try to understand it, and it still doesn't make sense, that's probably not your strategy. As traders, what we need to do is we need to learn from all these different resources and then develop our own strategy out of it. And then real quick, in case you guys did not know, I do have a 450-page book on Amazon titled The New Age of Technical Analysis. So if you're looking to learn more about my overall day trading and swing trading strategy, how to find bounces, rejects, support and resistance, Fibonacci, and so much more, make sure to check it out, The New Age of Technical Analysis on Amazon. The link will be down in the description. So that was the very first thing that tied me up earlier in my trading career, was flipping to different strategies. Once I was able to find a strategy and actually force myself to stick to it, that is when I started to see better results in the market. New market conditions change. Obviously, we had to change it up a little bit, but still my trading strategy is the exact same, just a little different because of the different market conditions. Plus I started using Fibonacci. Now, the second thing that tied me up a lot was watching too many stocks at once. As a newer trader, I'm sure you're looking to catch every single move in the market, but in reality, we are never going to catch every single move. All we need to do is find 1 to 2 really high probability moves and then catch those, and that is all we need in the market. So earlier in my trading career, I remember I was watching 6, 7, 8 stocks in one day. Every single day I would watch 6, 7, 8 stocks, and I would end up missing out on trades because I was watching too many stocks at once. It wasn't until I started narrowing that down to like 3 to 4 stocks a day, and now it's mainly just 1 to 2, just SPY and QQQ, and the futures as well, maybe SPX, but mainly just 1 to 2 that I focus on. And once I started doing that, I found a lot more consistency in my trading. Now, touching on SPY and QQQ, once I started sticking specifically to SPY and QQQ, that is really when I started finding more consistency in my trading. In my honest opinion, if you properly learn how to read SPY and QQQ as well as their futures, ES, NQ, and even SPX, that is all you really need in the market. I kind of imagine the market as one big spider web. In the middle, you have your futures, ES, NQ, the Dow futures if you want to watch that. Then after that, you start getting into SPY, QQQ, the diamonds, and then after that, you start getting into the individual names, Apple, Microsoft, Tesla, Nvidia, AMD, etc. Now, I'm not saying that you can't go out and trade these individual names. You just got to trade the names that make sense to you. Maybe you really like Tesla and AMD, then trade Tesla and AMD. Those are 1 to 2 stocks that you can watch every single day. And once you learn how to properly read the price action on those 2 stocks, that is all you need. But since I mainly trade SPY and QQQ, what I found out was I can find high probability setups on SPY and QQQ using the technicals through ES and NQ as well as SPY and QQQ. Now, one thing that I learned trading SPY and QQQ is intervals of 5 are very strong support and resistance areas. So things like 410, 415, 420, 425, those are typically psychological areas of support and resistance. As you can see, this 410 area has been a huge support and resistance in the past. If we zoom out, 410 to like 410.2, you can see all this price action that we had right here. If we look up here at 415, you can see multiple times we came up or down to 415 and we had our support or resistance touches. That is something that I notice on SPY and QQQ, and it's something that I incorporate into my trading strategy. Psychological numbers like 4,200, 4,300, 4,400, etc. on ES are psychological areas. Therefore, I can look for high probability trades at these psychological support and resistance levels. Now, another thing that I found out through ES, NQ, SPY, and QQQ is Fibonacci retracements are very, very, very accurate on these names. And that's why I prefer to trade them. That is where I notice Fibonacci retracements having the highest success rate. And in my honest opinion, it is much easier to read the price action on SPY, QQQ, ES, and NQ. And typically, if you get a gauge on where these names are going, you have an overall gauge on the entire market. So if you're doing your analysis on ES and ES looks ready to break an inverse head and shoulders, what do we think is more than likely going to start happening with stocks like Apple, Microsoft, Nvidia, Tesla, etc.? If SPY and ES are pushing up in price and QQQ and NQ, more than likely the individual names are going to push up in price as well. That way, if you are somebody who does prefer to trade the individual names, you can use the analysis on ES, SPY, QQQ, NQ to help you understand where the individual stocks can go as well. So in short, cutting down those 6, 7, 8 stocks on watch a day to just mainly 1 to 2, again, SPY and QQQ, that has helped me significantly find more consistency in my trading. Now, the next thing was mastering sniper entries. So what sniper entries allow us to do is get some of the best possible entries in the market. Like a really good example today was on QQQ. If we look at QQQ, I had 2 different retracement points, this pivot high to pivot low right here, and this pivot high to pivot low right here. I told everybody inside of Team Bull that my main reject was 322.85 to 322.90. And as QQQ came up to this level, using a 1 minute time frame, we can identify a sniper entry because we can see exactly how participants are reacting to our key areas of support, resistance, Fibonacci, supply and demand, etc. I'm not using 1 minute sniper entries just in the middle of nowhere. Like, I'm not watching the 1 minute time frame right here because I had no reason to. I'm only watching for sniper entries at key areas. So as price came up on QQQ, it blew through the 50% retracement. Therefore, there was no trade for me. But as QQQ came up, rejected right off of the fib levels right here, and price came down, that validated the trade. The stop loss was right above 323. So, I mean, we're risking 30 cents to the upside, 30, 35 cents. And as you can see, this thing was able to flush all the way back down into a low a day. So when it comes to sniper entries, I'm not trading based off of that 1 minute time frame. I'm taking higher time frames, 1 hour, 4 hour, daily, weekly, maybe a 30 minute, maybe even a 15 minute. But using the higher time frames and then using the 1 minute time frame to snipe an entry. Again, I cannot stress the importance of that. I am not trading a setup based on the 1 minute time frame. It is solely there to help me get into my trade, and after I am in the trade, I will then flip to a 5 minute or a 10 minute time frame. Now, the reason I wanted to bring up sniper entries is because when we are trading with sniper entries, we get some of the best possible risk or reward. We could lose on this trade 2, 3, 4 times in a row, and all we have to do is be right one time to make back those losses plus profit. So once I really started focusing on sniper entries, that is when I started to see more consistency in my trading. Now, if you're using a higher time frame like a 5 minute or a 10 minute, sometimes you could significantly skew the risk to reward against you, especially if you're waiting for those candles to close. That's why I like to break it down to a 1 minute time frame and snipe my entry. And obviously stick to my stop loss. If my stop loss is hit, I get out of the trade and I'll move on to the next one. Now, the next thing that did significantly help me in my trading was mastering level 2, mastering time and sales. And I personally use Bookmap. I have a bunch of videos on how to use Bookmap. So if you guys want to check those out, I will be leaving a video to one of them down in the description. Make sure you watch it if Bookmap does interest you. It pretty much just combines time and sales and level 2 in a very visual form. But pretty much with the time and sales, I use that specifically on the futures, and I filter it out to only pick up on large orders. I don't really care about these little individual ones coming in like 1s, 2s, because it's very hard to make sense of what's coming through on here. I like to pay more attention to the larger sizes, So I just filter it to show greater than 10. And when we come up or down to a key area, if there is actual participation at that level, you are going to see aggressive buyers or aggressive sellers entering the market. And you can see that visually through the time in sales. Now, when I'm using level 2, again, because I mainly trade SPY and QQQ, it's not every day that I will trade an individual stock, every once in a while, but I will use level 2 on the individual stock. And these are pretty much just limit orders. It lets me know if buyers or sellers are participating at a level. And I like to use a mixture of the level 2 and time in sales to help me identify my entries and identify participation at a specific area. It helps me a lot when it comes to avoiding false breakouts, and it helps me confirm my trade if there are truly buyers or sellers. And the final thing is going to be trading psychology. I talk about this a lot. I feel like I neglected the whole trading psychology earlier in my trading career, and I really wish I didn't, because when people say trading is truly 10% technical and 90% mental, they're right about that. If you're a newer trader, you need to learn the technicals before you can start building on your trading psychology. You got to find a winning system. Until you have a winning system, you're not going to have confidence in the market. So they kind of go hand in hand. But once you do have that winning system, I would definitely tackle trading psychology. There's tons of amazing books, The Mental Game of Trading, Trading in the Zone, The Daily Trading Coach. Yeah, once I started tackling the trading psychology and really understanding my overall thoughts when it came to trading, that is personally when I started to see more consistency in my trading. I was able to pick out specific things and identify moments where my psychology wasn't right. And through trial and error, I've been able to eliminate those motions. I'm able to pick up on them when they happen. But that is going to wrap up this video. So as always, if you guys did find value in this video, make sure you guys are subscribed to this channel. I have 700 free videos on this channel teaching you guys on how to trade. Make sure to tune in to the morning live streams, 8 a.m. Eastern time, where I make a completely free watch list for you guys. Gave you guys this 412 level for a reject this morning, so make sure you guys tune in. Other than that, everybody have an amazing rest of your day, and I'll see you guys in the next video.